This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on October the 5th, 2012. Our time is 8:44 Mountain, 10:44 Eastern. Our radio show runs AM 640 in Toronto, QR 77 Calgary, and 630 CHED in Edmonton. If you ever miss a radio show, they are archived on Harold's websites, rarecoloreddiamonds.com and HESradio.com. We also have a podcast through iTunes. The show is portable. You can take us anywhere through iTunes. It's the Thanksgiving long weekend in Canada. Happy Thanksgiving. Hope you are spending a little time with your family and enjoying a very nice meal. Down in the United States, as we tape this show on Friday, the jobs number came out very confusing. They were expecting 115,000 new jobs. They got 114, and yet the unemployment rate went down from roughly 8.1, 8.2 to 7.8. And then they've had all these revisions over the past month or so, and all these part-time jobs have come out of nowhere. In fact, Jack Welch said, well, here we go. Obama had a horrible debate, and now they're fudging the numbers for him. A lot of controversy with the numbers in the United States on a Friday, but the truth is it doesn't matter for those in the hard asset market. Quantitative easing to infinity, very positive for hard assets. It was a good week for gold and silver. And Harold, very confusing numbers coming out of the United States.
You bet. First of all, happy Thanksgiving to everybody. My favorite day of the year. I absolutely love it. You're 100% right, Randy. It's ridiculous, but it's election time, and funny things happen during election time, and, we don't really pay an awful lot of attention to that because it makes absolutely no sense. How in the world do they not hit their numbers, and the unemployment rate drops from 8.1 to 7.8? It's literally impossible for that to do so, but again, it's election time, and funny things happen during election, and a lot of it we shrug off because we have a fairly clear picture of where these markets are going and what's going to happen with the economy, and it's not good. Basically, the markets did well this week. Gold is trying to break 1,800. We're at 1,792. 1,800 for gold should not be a big deal because the major resistance is going to be at 19 and change. But again, it's just a psychological number, and we should break that next week. Gold is looking very, very strong. The silver market is above $35. We're trading at $35.05. What I would like to see is silver get to $38, $38.50, have two closes above that, and then by the end of the year we have a very good chance of seeing this market attempt to hit the $45 to $50 level. I do believe gold is going to break 1,900 and possibly go as high as 2,000 to 2,200, which were the numbers that we predicted at the beginning of the year for gold. So all in all, the markets look very, very good. And the fact is that we anticipate that with inflation, the markets are going to go substantially higher. We don't trade these markets. We buy and hold. To trade gold and silver is not a smart thing to do because the market is so extremely volatile. And unless you're an expert trader, you're going to end up losing your money. When you add into it the leverage, that you get in the gold and silver markets when you're trading futures and options, again, you're just taking an unnecessary risk that, again, you're going to miss the boat if you're not holding physical metal. What we want to do is hold physical gold for the next 5 years at least because of quantitative easing, which is going to bring on massive inflation, high oil prices and high food prices. There's just no doubt that gold's going to much, much higher prices. So, again, as a hedge against inflation, there's two ways to basically look at the gold and silver markets. Those that want to trade it to make a lot of money in the market, and those that use it as a hedge against much higher food costs and oil costs and the cost of living. And basically, if you don't own hard assets like gold or silver or diamonds, the fact is that inflation is going to eat you up. And there's no doubt, absolutely no doubt, that we are not only going to have inflation, but inflation that rivals 1979 and 80 when inflation was in the double digits. And if you all remember, interest rates went to 20 to 22%. We believe that is a possibility again. So you you should prepare for that, because there's a very good chance that that's going to happen. Platinum's made a very large move over the last couple months. In actual fact, platinum was about easily $100 or more below the price of gold for one of the first times ever, and platinum's making a very strong comeback. In fact, platinum's trading at $17.27, really only about $70 below the price of gold. Palladium is up back up to $6.73, and we are bullish on palladium also. All the precious metals are looking very, very good, as we should start to see inflation creep into the marketplace. The oil market has been extremely volatile, but we expected that. With the elections coming up, the White House would like to keep oil prices down to make things look better than they are, but then on Thursday, oil was up over $3 on the day. As we're taping this show, there's a little bit of profit taking. Oil's trading at $90, but all in all, the oil market looks phenomenal, and I do believe over the next 2 to 3 to 5 years, we will see oil prices above $200 or more a barrel. We do recommend owning oil in your portfolio. The U.S. dollar is down 16 points today. We're below the 80-cent level at 79.18. The lower the U.S. dollar goes, the higher gold and silver will go. And the good news is that the Canadian dollar right now is trading at 102.5. So basically, when you're purchasing with Canadian dollars, for example, buying in the U.S., you've got stronger buying power of 2.5 to almost 3%. So that's going to continue to go on our way. I know the Canadian government does not like a strong dollar because of exports type of thing. However, the fact is that most currencies trade against the U.S. dollar, and as the U.S. dollar continues to fall, the Canadian dollar is going to be a strong currency. Myself personally, I own a lot of Canadian dollars physically. I'm a big believer in the Canadian economy and the fact that Canada did not get into the problems in most cases that the U.S. has gotten into. Meanwhile, the real estate market in Toronto is falling fairly heavily, and again, I think that you've got to be very, very careful, because all markets have their own timing, and the fact is that the real estate market, in my opinion, at this point, is not necessarily the place to have your money. It's getting a little bit top-heavy. I want you to understand also, about inflation, because inflation is a major reason why we need to invest the way that we are right now. Gold, silver, diamonds, and oil are all areas that we are going to be able to take advantage of due to extremely high inflation coming. Now, for those of you that may not understand inflation, because the fact is, if you get an explanation from the White House, it makes absolutely no sense. They take into consideration the used car market and the rental real estate market. But in all honesty, every family that has to balance a budget looks at two things. Number one, the cost of oil, and number two, the cost of food. And that's basically what we have to be concerned about. If you get the newsletter this week, which I highly recommend you do, it's totally free of charge. Randy does an absolutely phenomenal job. We email this to you every single week, and the fact is that it will give you all the information that you need to make an intelligent business decision. Randy and I are not biased. It's not that we want to see, high inflation and destruction of currencies. It's just happening. It's our job to analyze it and to report to you what's going on and what you need to do so you don't get into trouble financially. And the fact is that there is no doubt in my mind, and some of the most brilliant people in the world are saying that inflation is not only around the corner, but it's going to be massive. And if you don't prepare for it, you're going to hurt financially. And what you need to do, and what you really need to understand, is that when currencies go down, for example, in the United States and in Europe, they're printing so much money at this point here because they have no money. And they have to print money in order to get the economy back on track. So when you print a lot of money like they're doing in the States and in Europe, it weakens your dollar. That means that the dollar doesn't buy as much. Now, under normal circumstance, if oil was at $18 and food prices were moderate type of thing, it wouldn't be such a bad situation. However, oil prices are hovering at record levels and basically going higher, and food prices are at ridiculously high prices, so your dollar is not going to buy as much. And if you don't own the type of assets that go up during times of high inflation, then you're going to suffer financially, and that's the last thing that we want to see happen. We've been doing this radio show for 11 years and have given you very strong information that has turned out to be extremely accurate. I'm positive that we are going to see massive inflation, and if you haven't already started to prepare for it, now is definitely the time to do so. First of all, the fact is that some of the most brilliant minds believe that we're in a recession in the United States right now. David Rosenberg said that the crucial economic indicator just sank to a level that coincides with a recession 100% of the time. So basically, history shows that when the trend weakened to the level that we see today, the economy was in recession 100% of the time. You should definitely read that article. Also, Zell, who's a very famous economist, is also saying that we're heading for a recession. They're also saying that, and this is extremely important, that oil prices will continue to go higher. Food prices, by the way, are at a 6-month high as dairy costs rise substantially. World food prices are skyrocketing, and basically they're saying that food prices are soaring further into the danger zone. So as food prices continue to go higher and higher, and add that to oil prices going higher and higher, that is inflation at its most simplistic point, but it will affect us in a huge way. Add that to the fact that, dollars are getting weaker and weaker, and the fact is that we're going to have massive inflation. In 1972, you could have bought gold for $125. By 1980, with high inflation, it was at $850. It went up 800%. In 1972, you could have bought silver for $1.25. By 1980, with high inflation, silver was trading at $52. So if that doesn't tell you what's going on in the markets in the past, and if you don't learn from history, history always repeats itself. So again, with weak dollars, quantitative easing 3 and 4 coming, there is no doubt that what the Federal Reserve is doing is that they're willing to sacrifice the future for trying to get things on track today. And the fact is that what they're doing just isn't going to work. So my strongest recommendations at this particular point, and this is extremely important, if you've been a listener to this radio show for 10, 11 years or 2 or 3 years, whatever, you've got to realize that at this point here we're heading into a very dangerous time. And the fact is that if you're sitting in paper assets like stocks and bonds and mutual funds and those type of things, you're susceptible to substantial losses in the market. We saw it in 1999 when the dot-com companies fell apart and the stock markets plummeted, and then we saw it again in 2008 when the Dow and the TSX pretty well fell in half. We've got a very good opportunity to see that happen again at the end of this year. So with these President Bush tax credits that are supposed to expire at the end of this year, it could send the stock market down 30 or 40%. If that's possible, why do you want to have your money in that market? Why not just go on the sidelines and put it on the sidelines into cash and don't do anything? Because most people feel that if you're not in the market or not in the game, that you're not making any return on your money. And a lot of people have a lot of problems dealing with not making a return on your money. But let's face it, when the risk is as high as it is, why would you want to risk losing so much of your money just because you're concerned about returns of investment? My suggestion is get out of that market. The risk is so high that if this market falls again, you could be behind the 8 ball for the next 2, 3, 4 years. The other situation is that not only could stocks fall, but again, you could be looking at extremely high inflation. So you just don't want to put yourself in a situation to where you can lose all of your money. What you want to do is you want to do the opposite of paper assets. You want to buy the assets that are going to go up with inflation. That's gold and silver and diamonds and oil. It's always been proven over time. And if it happened in 1979 and 80, the exact same situation is going on right now, except much more extreme. So again, gold prices by the end of this year could easily be at $2,000 to $2,200 and then take off heavily next year as quantitative easing really starts to take effect. Silver could get back to the $45 to $50 level this year, but then take off again. And we do believe that silver will be a triple-digit number before this trade is over the next 4 to 5 years. It means that silver at $35, if it goes to 100, you're going to triple your money. If it goes to 200, you're going to make about 600% on your money. So again, that will offset inflation and put you into a very strong cash position. We're going to talk about the diamond market, which is explosive and one of the most amazing hedges against inflation that you could ever buy a little bit later on in the show. But Randy, the way I see things right now, it's defined. There's no doubt in my mind that we're going to see heavy inflation coming forward. And basically, what you need to own is gold, silver, diamonds, get out of paper assets, keep a little bit of cash on hand because there will be opportunities, but that's the way I see things at this point. And again, it's a very clear picture as far as I'm concerned.
Connect with Worldwide Precious Metals. There's only one company Harold recommends you use when it comes to starting a precious metals investment account. Worldwide Precious Metals, website www.pmc.com, their telephone number 1-866-623-2002. And they will educate you as to why you need to have an allocation of precious metals in your portfolio. Since 2001, gold and silver, they have resumed their role as a store of wealth, protecting you against the decaying purchasing power of the paper money we all have. Now, you can stop the destruction of your paper wealth by investing in hard assets such as gold, silver, and diamonds. You can turn paper assets into hard assets for real wealth. And we're going to talk about that here in a second, how critical it is. Connect with Worldwide. Their telephone number, 1-866-623-2002. Their website, www.pmc.com. They have been in business over 10 years. They have 10th anniversary incentives. Speak to them today about investing in hard assets, gold and silver. This is so critical. Really pay attention to what Robert Fitzwilson has to say, and you can read this article in our newsletter. It's from King World News. Eric King interviewed Robert Fitzwilson, who has been a money manager for 40 years. He says, for our portfolios, the message is clear. Get out of paper assets that can be destroyed by the unlimited, basically printing of dollars, and convert them into real assets. The end of the fiat money system will come swiftly and perhaps overnight. It cannot be too far off at this point. Changes are coming, but it doesn't mean the world will come to an end. But financial regime changes do result in a massive transfer of wealth from those who own paper assets to those that own real assets. Historically, gold and silver are traditional safe havens. Despite what we read, the physical supply of these metals is becoming diminished for a variety of reasons. Waiting too long to purchase them could result in the inability to do so, or certainly being forced to buy at much higher prices. And that's something we're really starting to hear a lot about. People need to get their positions today in hard assets. When this money, obviously when this market runs, a lot of money will be made. But you may not be able to get on the train at that point. Rick Santelli, who you see on CNBC all the time talking about the bond market, said, I can't tell you the best time to get into gold, whether you are supposed to buy dips or whether you're supposed to buy strength. But in the end, the gold trade really is an anti-printing trade. And I would be surprised if the direction of gold doesn't remain to the upside. James Turk said this week, currencies will continue to fluctuate in value against one another, but you can be sure of one thing. Against gold and silver, they will continue to lose value. He also said the logical and prudent thing to do is to continue to accumulate both physical gold and silver. Sometimes the best strategy is the simplest. And there is nothing simpler than building up one's precious metals holding on a regular dollar cost average basis and listening to one's own common sense instead of the pronouncements of central planners. It's a must-read newsletter. Get it from Worldwide. Speak to them. 1-866-623-2002. 1-866-623-2002. Their website is www.pmc.com. We obviously are strong believers in the silver market. We have a strong gold section of our newsletter and silver section. If you'd like to receive our free weekly newsletter, Speak with Worldwide, we have our charts of the week, quotes and quick hits, information on diamonds, gold, silver, the Fed and quantitative easing, the U.S. debt and deficit crisis, the sovereign debt crisis, the stock market, real estate, and geopolitical concerns. Michael Pinto, who's a money manager, came out this week and said the Fed unofficially announced QE4. That's when the Fed, one of their presidents, Charles Evans, out of Chicago, the Chicago Fed, said on CNBC that they will continue quantitative easing until the U.S. jobless rate goes below 7%. They will just keep plugging away, printing money, and buying their own bonds. Harold, we have about 3 minutes left. That is very bullish for hard assets. Even though we had a very strange, confusing job number come out of the United States, don't be confused here. Listen to what they're saying, but also watch what they're doing. It's more important to watch what people do. They're printing money, and they're doing it on a regular basis every month, quantitative easing to infinity. And one thing we've heard many times, don't fight the Fed. You might as well take advantage of what they're doing, and that indicates an asset that you must have at all times, precious metals, hard asset.
You bet. Again, these are action-reaction type of markets, so when one thing happens, the market is going to react. But again, they may react a little bit slower because this year is an election year, and again, it's a very, very important election. So we don't put a lot of credence into what's happening in the election at this point. We believe it is going to not affect the markets at all over the longer term. And again, at this point here, we just want to stay with our recommendations of protection, having insurance. Buy physical gold, physical silver, especially at $35. It's a tremendous buy, and diamonds and oil will get us through these difficult times, and we'll end up doing very, very well from it.
Harold touched on the fiscal cliff the United States has to deal with after the election, and that is not only the former U.S. President George Bush, the tax breaks that he had in place are about to expire, but also when they had the problems with the debt ceiling about a year ago and they hammered out a deal, there are massive budget cuts coming to the U.S. government. And when you take those budget cuts into account and you take the tax breaks into account, that will be a major drag on the U.S. economy. If they do not do anything about it, there is serious, serious trouble ahead. And as well, they will have to raise their debt ceiling again. Michael Pinto said this week, and this is an update on what I was mentioning earlier, don't fight the Fed. Investors should never fight a central bank that is pledged to do everything in its power to prop up asset prices. A firm commitment from those that control the currency to systemically destroy its value renders investors with no choice but to plow money into precious metals. If you do not have an allocation of precious metals, now is the time. Don't wait. Speak with Worldwide today, 1-866-623-2002, 1-866-623-2002. The website is wwpmc.com. We're going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert Harold Siegel. We're taping the show on October the 5th, 2012. Our time is 9:09 Mountain, 11:09 Eastern. Radio show runs QR 77 Calgary, 630 CHED Edmonton, also AM 640 in Toronto. If you ever miss a radio show, they're archived on Harold's websites, rarecoloreddiamonds.com and HESradio.com. We have a podcast through iTunes. The show is portable. If you have iTunes, you can take us anywhere you go. It's the Thanksgiving long weekend here in Canada, and happy Thanksgiving. Hope you get a chance to have a nice meal with your family, spend a little family time, and just a time to sit back and relax and wonder when the heck is the NHL going to get it together and get playing again. These, billionaires fighting with multimillionaires. Come on, guys. To invest in precious metals, there's only one company Harold recommends you use. That is Worldwide Precious Metals. Their website, wwpmc.com. wwpmc.com. Their telephone number, 1-866-623-2002. You can get our free weekly newsletter from them. Harold's website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. Speak with Harold about diamonds, 1-800-432-1022. He has his auction website. Auctions coming up a little later on this month for hsfineauctions.com. hsfineauctions.com. You can take a look at the website and get ready for what we will believe will be some very spectacular auctions. The Rare Colored Diamonds Featured Diamond of the Week. This week's featured diamond is a 0.27 carat round, brilliant cut, fancy, intense pink. The Argyle Pink Tender is underway as we speak. You don't have to wait for that tender. You can invest in a rare colored diamond today through rarecoloreddiamonds.com. This is a beauty. Brilliantly cut. It's so beautiful. It's a piece of art. 0.27 carat round, brilliant cut, fancy, intense pink diamond. We have the video for it. Go to rarecoloreddiamonds.com and take a look at the featured diamond of the week. Harold, this diamond is simply stunning.
It certainly is. And again, pink diamonds are very, very rare and phenomenal investments. And that particular diamond is extremely rare for several reasons. One, the cut. A round cut is the rarest cut, most difficult, and demands a premium. So, again, this is a round, brilliant, fancy, intense pink, which is a phenomenal color. And, again, the diamond is just an amazing investment diamond that you'll do tremendously well with. There's amazing diamonds in the world, and rare colored diamonds represent a very, very, very small portion of the diamond market. That's why they're so rare. That's why they do so well financially, because there's so few of them available. It takes 100,000 carats of white diamonds just to find one colored diamond. And just because a diamond is colored does not mean it's a great investment. You need certain criteria in order for it to be an investment gem. For example, with yellow diamonds, it's got to be one of the 3 or 4 best colors, and then on top of that, it's got to be flawless. So if the diamond is not internally flawless, the fact is that the diamond will not have the same track record as a yellow flawless diamond that goes up by 25% a year every year and doubles every 4 years in price. Tell me any other investment at this particular point that has that type of track record with no risk to it, because yellow flawless diamonds have never, ever fallen in price. Back in 1980, you could have bought one of these diamonds for about $500. Now they're about $20,000. That's how much they've gone up since that point. It's not a short-term investment. You don't buy a flawless diamond today and sell it next week. You're not going to make any money. Most of my clients that invest in yellow flawless diamonds, as an example, they do it for retirement. They put them away for 10 years. Because, again, if you were to buy a $20,000 flawless yellow diamond today and put it away for the next 10 years, in 10 years from now, that diamond could be worth at least $100,000. So you tell me that if you were to put $20,000 into the stock market, would you get the same return with the safety that you get in the yellow flawless? The other thing about yellow flawless diamonds is that during times of high inflation in 1979 and 80, they went up 500% in those 2 years. 500% in 2 years. So the thing is that if we get the inflation that we saw back in 79 and 80, which I think is guaranteed. I don't see any way that we're not going to have heavier inflation than we saw back then. Again, we could see over the next 5 years, while this quantitative easing is going on, these diamonds take off like a commodity. That's what they did in 79 and 80. They went up every single quarter that the cutters raised the prices of these diamonds. Now, if you look on our website, you're going to see a large amount of these diamonds. I've invested very, very heavily in these diamonds for my family and for my clients, and that's primarily because they're phenomenal investments. They're the safest investments that you could make, and they go up tremendously during times of high inflation. So if you look under the fancy yellow internally flawless diamonds, there's about 25 diamonds there. I've invested extremely heavily in them. We cut 85% of the world's flawless yellow diamonds, and most of those diamonds go to our Canadian clients. Most of my clients that have been in the markets with us since gold was at $250 and silver was at $4 and $5, all own diamonds put away for the family in the future, and now with inflation on its way, it's one of the best investments you could make. Now, what I would highly recommend that you consider is that you can start getting involved in yellow flawless diamonds for about $15,000. $15,000 is a lot of money. And the fact is that not everybody has $15,000 minimum to invest in a diamond, and if you don't, then it's not the right investment for you. The fact is that you don't put all of your money in only one asset. You need to diversify. But for those of you that can afford this type of investment, it's one of the best investments you'll ever make. You'll make a lot of money with it, and there's no risk to it, and it'll hedge you against inflation. I have many clients at this particular point, and one of the strongest recommendations I'm making right now is that if you have, for example, $100,000 to invest, I would recommend looking at 5 yellow flawless diamonds possibly, because it gives you tremendous flexibility. Number one, you've got the potential to make 400 to 500% on your money. Number two, these diamonds go up at least 25% a year, and again, with currency debasement, inflation coming, and all the other situations that are present in the markets right now, this is probably one of the most important investments that you will ever make. And if you own 4 or 5 or 3 or 2 or 8 or 10, whatever amount that you can afford to own of these particular diamonds, it gives you the opportunity, if you need to sell off 1 or 2 of them, in the next 2 or 3 years when the markets are double. So again, I would recommend looking at multiple yellow flawless diamonds while they're still at a level to where they're reasonable in price. There is no doubt that these diamonds are going to go substantially higher with inflation, and there are more millionaires and billionaires in the marketplace at this point than any other time in history. And we sell diamonds worldwide. We sell diamonds in areas where the currencies are the strongest, so our clients make the most amount of money. For example, out of London, England, many clients are buying diamonds because the British pound is worth so much more than the U.S. dollar, and our diamonds are priced in U.S. dollars. The other situation is being Canadian, the Canadian dollar is worth 2.5% to 3% more than the U.S. dollar, so you're getting tremendous buying power there. I would go on our website, rarecoloreddiamonds.com, rarecoloreddiamonds.com, go to the loose diamonds section and look at the fancy light yellows. Those are in the 15,000 range. Look at the fancy yellows. Those are in the 20,000 range and up. Look at the fancy intense yellows. Those are up close to 30,000. And then look at the fancy vivid yellows, the rarest of all yellow diamonds, and those are in the $50,000, $60,000, $70,000 range. And all of these diamonds by the end of this year will see a price increase as the cutters are raising prices because there's so few of them available. The other thing is that as these markets get more and more active, as more and more people around the world understand how important it is to own an asset that is portable private wealth, that nobody knows that you own, that you can sell in another currency, that responds to inflation as well as gold and silver without the risk. This is the asset that you want to put away for your future. They're so safe that I put these away for my 3 young grandchildren. They own yellow flawless diamonds for their future. I very strongly recommend that you get into this market while you still can, and while inflation is still at a level that has not caused these markets to go substantially higher. When it comes time to sell these diamonds, we will sell the diamonds for you because that's how we make our money. We're the only company that can resell diamonds for you. There are a lot of other firms that have popped up in Toronto and other areas that copy what we do. I don't have a problem with that. Competition is very good. On every street corner, there's a Wendy's, McDonald's, and Burger King, and they all do business. The difference between my company and other companies that we've been in business 35 years, they just started. Number two, we realized that diamonds in the past were difficult to resell. If you didn't own a $20 million diamond that you could sell through Christie's and Sotheby's, how in the world do you resell these assets? We invested very heavily, built our own auction business, the only live real-time auction website to resell very high-end diamonds. And that's what we do for our clients. We sell gold and silver coin sets. We sell very rare stones like emeralds, rubies, and sapphires. But the major reason that we build 8 Seagull Fine Auctions is for our clients that purchase diamonds through my company to be able to resell their diamonds at a very high level. And if you don't do well, we don't do well because we get paid only a commission, a percentage of your profit. We get 10% of the profit only. So if we don't do a great job for you, we've haven't done a good job for ourselves either. I know my business extremely well. I've been in the investment business for 35 years. Again, nobody ever talked about investment diamonds till we wrote our article 7 years ago, Rare Colored Diamonds, the Best Kept Secret. We're the number one company in rare colored diamonds. All the other firms out there that copy what we do cannot resell your diamonds for you. So please, before you make a decision, go to our website, rarecoloreddiamonds.com, look at the largest supply of yellow flawless diamonds in the world, and you're going to find a diamond that's within your comfort level, and we're going to help you every step of the way. We ship the diamond directly to you. We pay for the shipping, the insurance, and the duty coming into Canada. We send you our newsletter every single week. We send you our diamond newsletter every single month with special diamonds in there. And again, we hold auctions for rare colored diamonds, and we're the only company that can resell your diamonds for you. The other diamonds that you want to own are pink diamonds from the Argyle mine. 95% of the pink diamonds in the world, which is an extremely small number, comes from one mine and one mine only. It's the Argyle mine in Western Australia. This mine produces 95% of the pink diamonds in the world, and the mine is going to close within the next 5 or 6 years. So if you own an Argyle pink diamond, we believe the prices in the next 10 years will go up 10 times what today's prices are. Means that if you bought a $50,000 pink, it could be worth $500,000. If you bought a $100,000 pink Argyle, it could easily be worth $1 million. It's happened in the past, and it's happening right now in front of your eyes. Right now, we have the most beautiful Argyle pink diamonds you could ever lay your eyes on. These are museum quality pieces, and again, these are the diamonds that will go up 8 to 10 times what today's prices are. You can get involved in Argyle Pink starting in the $20,000 to $25,000 range. Another thing that we do with our Argyle Pinks and with our Yellow Flawlesses is that we have our own line of very, very high-end jewelry. We make the most beautiful Argyle Dream Collection diamonds, rings that you have ever seen in your life, and we place a little red diamond inside the band for you as our gift to you and a signature, and that alone is worth $15,000. I bought those 10 years ago for $1,000 a piece. Now they're up to $15,000, and we put them into our rings as a gift to our clients. We do everything that we possibly can to build you the most beautiful piece that we could sell at auction for a fortune for you, because again, when you do well, my company does well also. We carry red diamonds, the rarest diamonds in the world. They start at about $2.5 million a carat. Very few people can invest in a red, but there's only very few of them available in the world anyways. Maybe one comes onto the market every 3 or 4 years. We have 2 red diamonds on our website right now under the red diamonds section that are Argyle reds, the rarest red diamonds in the world, and we have 2 of those that will just absolutely blow you away. By the way, we don't only have the most beautiful pictures of our diamonds, but we invested heavily in technology that videos our diamonds for us. So you go on our website, click on a diamond, and watch the video of this diamond. You'll just flip out over it. It's just absolutely stunning. These are the most beautiful investments that you could ever own. You know, many clients have said to me over the years, you know, Harold, we get our statements at the end of the month on our RSP on our stock account, and we're so discouraged and so upset by how much money we're losing and we can't retire correctly that we shred our statements. They're so depressing. But when you look at your diamond on your wife's finger or in your safety deposit box, it's a totally different feeling. When you see one of our diamonds, especially when it's displayed in a ring, you just can't take your eyes off it. It's a museum piece, and it's one of the best investments you could ever make. So again, with the state of the world economy, with countries going bankrupt in Europe, with tremendous debt situations that are going to wreak havoc on the financial markets all over the world, what does a small investor do? A small investor does not have to be susceptible to what the markets dictate. What we need to do is be smart about this. I've done my homework. I've been through these markets for the last 35 years. I've been through the inflationary markets of the late 70s, early 80s, and I've traded those markets. And the biggest returns came from gold, silver, diamonds, and oil. And those are the same markets that are moving now, and they're still affordable, and this is the time to get into it. If you're going to invest in yellow diamonds, try to pick up a few of them, because while they still exist, you're going to find that these diamonds are going to go up tremendously, and you will be in profits in them before the end of the year, because by the end of the year, those diamonds will go up by at least 25%. During times of high inflation, which is coming, they can go up 400 to 500%. So again, I'm very excited about the diamond market. Our website is spectacular. You're going to see the majority of the yellow flawless diamonds on our website. Now, by the way, you may see a trickling of other diamonds on other websites that they may have a couple flawless yellow diamonds. In most cases, those would have been diamonds that we would have rejected. There are levels of diamonds. A diamond can be a fancy yellow, internally flawless, but on a scale from 1 to 10, our diamonds are 8s, 9s, and 10s. Competitors end up with the diamonds that we reject, which are 3s, 4s, and 5s. So you just know it by looking at the diamond. All we want is for our clients to get through these difficult times and to do extremely well. And again, go to rarecoloreddiamonds.com, look at our yellow flawlesses, look at our argyle pinks, treat yourself to looking at a video of a very rare red diamond. We've got magnificent blues and greens. And even though the name of our company is Rare Colored Diamonds, we do carry one type of white diamond. The rarest white diamonds in the world are called D-flawless whites. They represent 0.001% of the market. They're ridiculously rare, and last year they went up by 45% because they're nearly impossible to get. So when you go to our legend on rarecoloreddiamonds.com, that will show you all the colors. We have yellow, we have pink, we have D-flawless whites that went up 45% last year. They're ridiculously beautiful and extremely rare. We have very rare blue diamonds, red diamonds, green diamonds, orange diamonds. We have one of the only pure purple diamonds ever found in the world, and it's on our website in video. So do yourself a favor, have a lot of fun. Go to our website, rarecoloreddiamonds.com, do your homework. We have a historical price tracking system that will tell you what diamonds were 30 years ago, what they are today, and what they'll be 10 years from now. We do everything for our clients. We ship them to you, we stay in touch with you, and we sell the diamonds for you when the time is right to do so, and we're the only company that can do that for you.
RareColoredDiamonds.com. Take a look at our featured diamond of the week, 0.27 carat round, brilliant cut, fancy, intense pink. It is beautiful. And the thing that is great about Harold is he is very accessible. You can call him. He'll pick up the phone and speak with you personally and privately. The telephone number, 1-800-432-1022, 1-800-432-1022, rarecoloreddiamonds.com. Now, since the 70s, colored diamonds, since records were first formally kept, have averaged around 10-15% appreciation per year. And that actually is very good considering the financial times that we've been in since the 70s. Markets, sure, they go up and down, but the long-term trend is definitely up. Now, we are having a time in the world where we're seeing Asia, India, we also have China. They're developing. Their countries are developing, and they're building a new middle class, and they have a new rich class as well. And what are they moving into? Diamonds. They are going to overtake the United States and other parts of the world when it comes to buying the world's rare diamonds. And that's another reason to position yourself today. It's a concentrated store of wealth. You have something that you can hold in your hand. And that is so important in the days of the Stanford Financials, the Madoffs. You have something in your hand. And it's better than cash because it can't be debased. Ben Bernanke, he presses a little button and they run off a whole bunch of U.S. dollars. He can't do that with rare colored diamonds. You're protected. And I think probably one of the best parts about diamonds, it's tangible and it's something that you can use daily. You can have a diamond on your finger. It can be mounted, displayed, appreciated. And obviously, you can sell it as well. It's real estate in your pocket. Not many assets can you really enjoy. Obviously, art is another asset similar to diamonds. This is nature's art. And with the times that we're living in where somebody can press a button and a whole bunch of dollars comes rolling out, that means we're being debased. The paper money that we have is being debased. That's not the case with rare colored diamonds. Speak with Harold, rarecoloreddiamonds.com, and telephone number 1-800-432-1022. Get our weekly newsletter from Harold. Get our monthly newsletter from Harold. But Harold, it's so critical, and people have to understand that. This is an asset you can hold in your hand. Unlike stock certificates or bonds, and the Madoffs of the world, they preyed on people. But when you have that asset in your hand, you know you have it.
You better believe it, and that's very, very important in this day and age. The other thing is that we want to educate you on this. So we definitely have an online seminar that will take you from A to Z. It will teach you everything about the diamond market. It'll teach you how to read a GIA report. It will tell you all about different cuts of diamonds, which ones are worth more than others, the clarities, how they play into it, the 4 C's, everything. And then we show you how to cut a diamond, everything. It's a phenomenal online seminar, and we do that either for individuals, for groups, and it's totally free of charge. Again, we want you to understand this market. It's extremely important. And again, sign up for one of our free seminars, and we do it on the phone and online for you, and you're going to find it extremely informative and very, very enjoyable. So, again, go to our website, rarecoloreddiamonds.com, and have a lot of fun there. Go on the historical price tracking system. Go ahead and look at all of our diamonds in the loose diamond section, and you're going to find that you can sign up for an online seminar, and it'll be our pleasure to go through everything with you so you understand exactly that you're doing before you do it. So, again, rarecoloreddiamonds.com, and we will announce within the very near future when our next online auction is going to be, and I can assure you it's going to be a phenomenal auction as we have some beautiful diamonds put away for it.
Take a look at the website ahead of time, hsfineauctions.com. Get acclimatized to the website, rarecoloreddiamonds.com, and speak with Harold personally and privately. He'll be happy to take your call, 1-800-432-1022. The company Harold recommends you use here in Canada, obviously they deal all around the world in precious metals, gold, silver, platinum, palladium, worldwide precious metals. wwpmc.com is their website. Telephone number, connect with them, 1-866-623-2002. You can get our free weekly newsletter from Worldwide as well. They'll send it out to you via email free of charge. We have a strong gold section of the newsletter this week, and we have a strong section on silver as well. And there's a great story from Casey Research on how silver is being used in solar panels. One of the big issues for the United States, and I saw an interview with Paul Ryan, who is the running mate for Mitt Romney on television, and it was interesting. When he first got into the U.S. Congress, he went and had lunch with Barney Frank, who's a Democrat, and said, give me some advice. And he said, specialize in one area. And Paul Ryan, what he has done is specialized in the finances of the United States. And he said on TV that the United States is basically maybe 1-2 years away from being a Greece, being a Spain. And it's interesting to note that the United States, their debt is at $16.1 trillion. And in the first month of their fiscal year for 2012, it's up $93 billion. That's right, $93 billion that first month they went into debt. You have the fiscal cliff that's hanging over their head, and the debt situation, it's not sustainable. In fact, Mitt Romney brought up during the debate 42% of the resources are going to government. That's similar to Spain. It's just not sustainable, and that's why we're recommending hard assets as well. Harold, with about a minute left, I hope you have a happy Thanksgiving.
Well, thank you very, very much. Like I say, it's my favorite day of the year. Wife is a great cook, and I wish everybody a wonderful Thanksgiving. It's a beautiful family day, and hope everybody truly enjoys it. And I wish you a good weekend and a profitable day.
And maybe the NHL, they'll give us a little treat and come up with a deal so we can get our hockey back. Connect with Harold. He'll speak with you personally, privately. Everything is confidential. 1-800-432-1022, rarecoloreddiamonds.com. Take a look at the auction site. Get ready for an auction later this month, hsfineauctions.com, and speak with Worldwide about precious metals. They're the experts in this specialized field. They're the only people to deal with. wwpmc.com, their website, telephone number 1-866-623-2002. Have yourself a fantastic Thanksgiving long weekend. Don't eat too much turkey or pumpkin pie. We will talk to you next week.